Have you ever wondered what would happen if the decentralized financial world of Bitcoin clashed with the centralized paradigm of central bank digital currencies? We're delving into the heart of this question today, exploring the differing worlds of Bitcoin and CBDCs. These two financial phenomena, one decentralized, the other centralized, are shaping the future of our financial landscape. We're going to peel back the layers, revealing their journey and their potential implications. So, buckle up for an insightful journey through the world of digital currencies. The inception of Bitcoin dates back to 2008, in the aftermath of the global financial crisis. In a world shaken by economic uncertainty, a pseudonymous figure named Satoshi Nakamoto saw the need for a new kind of money, a type of currency that could operate independently of traditional banking systems, providing a degree of financial freedom and control previously unattainable. Thus, Bitcoin was born. For the first few years, Bitcoin remained a bit of an enigma, lurking in the shadows of the internet. It was largely unnoticed, dismissed by many as just another internet fad. But Satoshi Nakamoto's creation was far from a passing trend. As we delve into Bitcoin's history, we find a significant event that marked its first steps into the light. This was the first known transaction involving Bitcoin. On May 22, 2010, a man named Laszlo Hanyecz made history by purchasing 2 pizzas for 10,000 Bitcoins. At that time, the value of Bitcoin was negligible. But that transaction set a precedent, proving that Bitcoin had real-world value. Fast forward to 2011, and Bitcoin reached parity with the US dollar. This was a pivotal moment, signifying that this digital currency was not just an obscure internet token, but a viable contender in the realm of global finance. Then came 2017, a year that would forever be etched in Bitcoin's history. The value of Bitcoin surged dramatically, peaking at nearly $20,000 per Bitcoin by the end of the year. It was a roller coaster ride that left the world in awe and brought Bitcoin firmly into the mainstream. From its humble beginnings to its meteoric rise, Bitcoin's journey has been nothing short of extraordinary. It challenged traditional notions of what money could be, breaking free from the constraints of centralized control. It demonstrated the potent potential of blockchain technology and set the stage for a plethora of other digital currencies. Bitcoin, the first of its kind, paved the way for a new era of digital currencies. While Bitcoin was making waves in the digital world, central banks worldwide began exploring their own version of digital currencies. Enter central bank digital currencies, or CBDCs. These are a new type of currency, issued and controlled by central banks, but existing entirely in the digital domain. They're not a fancy new type of banknote, nor are they a credit card. They're essentially a digital form of cash. So why are central banks interested in these digital currencies? Well, it boils down to 3 main reasons: efficiency, stability, and control. CBDCs can potentially streamline payments, making them faster, cheaper, and more transparent. They offer a stable digital currency alternative, backed by the full faith and credit of a nation, unlike the wild volatility of cryptocurrencies. And they allow central banks to maintain control over the money supply, a critical aspect of national economic management. The concept of CBDCs isn't a mere thought experiment. It's already becoming a reality. Early experiments with CBDCs have been conducted in several nations, with varying degrees of success. Leading the pack are countries like China and Sweden. China, a nation known for its rapid technological advancement, has already started pilot programs for its own CBDC, the digital yuan. Meanwhile, in Sweden, where the use of cash has been rapidly dwindling, the Riksbank has been exploring the e-krona, a digital complement to physical cash. These countries are not alone. The Bank of England, the European Central Bank, and the US Federal Reserve, among others, are also exploring the potential of CBDCs, each with their own unique approach, reflecting their individual economic circumstances and strategic goals. CBDCs represent a significant shift from the traditional concept of money. They're a fusion of the old and the new, bringing together the stability of traditional currencies with the innovation of digital technology. And as they gain traction, we're seeing the beginning of a new chapter in the story of money. As CBDCs gain momentum, the world is gearing up for a major shift in the financial landscape. Now that we have the background, it's time to delve into the clash of these two digital currencies. It's like watching two gladiators in the arena, each representing a different philosophy. On one side, we have Bitcoin, the standard bearer of decentralization, and on the other, central bank digital currencies, or CBDCs, representing the traditional centralized system. Consider this. Bitcoin is decentralized, meaning it's not controlled by any single entity. It's a peer-to-peer system, where transactions happen directly between users without an intermediary. This decentralization is at the core of Bitcoin's appeal. It's about financial independence and freedom, a world where individuals can control their own financial destiny. CBDCs, on the other hand, represent centralization. They're digital versions of a country's currency, created and controlled by its central bank. Unlike Bitcoin, CBDCs don't aim to replace the traditional financial system, but rather to enhance it by infusing digital technology. Now, let's talk about privacy. With Bitcoin, all transactions are recorded on a public ledger known as the blockchain. While this ledger is transparent, the identities of the parties involved in a transaction are concealed, providing a level of privacy. CBDCs, being part of the regulated financial system, will likely have more stringent identification requirements, which could limit privacy. Potential use cases are another area of clash. Bitcoin, with its decentralized nature, is often seen as digital gold, a store of value. It's also used for remittances, especially in countries with unstable currencies. CBDCs, however, could be used for everyday transactions, just like physical currency. They could also enable faster and cheaper cross-border transactions, a domain currently dominated by traditional banking systems. So what could be the potential impact of CBDCs on Bitcoin and vice versa? Well, CBDCs could potentially streamline the financial system, making transactions faster, cheaper, and more efficient. This could make Bitcoin's value proposition less appealing to some. However, if CBDCs limit privacy, or if people continue to desire a decentralized alternative, Bitcoin could still thrive. On the flip side, the rise of Bitcoin and other cryptocurrencies could push central banks to innovate and adopt digital currencies faster. Bitcoin has shown the world that a decentralized digital form of money can work. This could be a catalyst for central banks to evolve and adapt to the changing financial landscape. It's a fascinating tug of war, isn't it? Two different paradigms, each with its own strengths and weaknesses, each trying to shape the future of money. But remember, it's not necessarily a zero-sum game. Bitcoin and CBDCs could coexist, each serving different needs. As Bitcoin and CBDCs continue to evolve, their interaction could shape the future of global finance. And as spectators in this grand arena, we get to witness this clash of paradigms unfold in real time. How exciting is that? So, where are we headed in this digital currency revolution? As we delve into the future of digital currencies, we find ourselves at a crossroads where the decentralized Bitcoin and the government-backed central bank digital currencies, or CBDCs, may have to find a way to coexist. Bitcoin, with its decentralized nature, offers a level of freedom and privacy that traditional financial systems and even CBDCs can't match. It's a digital gold of sorts, a store of value that isn't influenced by the whims of any single government. Its future, however, is still subject to a host of uncertainties. Regulations could pose a threat, and its volatile nature could deter mainstream adoption. Yet, its resilience and adaptability could see it thrive as a niche, alternative asset class. On the other hand, CBDCs, backed by central banks, come with the promise of stability and regulation. They could revolutionize cross-border transactions, making them faster and cheaper. They could also make financial systems more inclusive, reaching people who are currently unbanked. However, they also raise questions about privacy and control. Will central banks be able to balance the need for oversight with the demand for privacy? It's a question that remains unanswered. These two paradigms could potentially complement each other. Bitcoin could serve as a digital asset, an alternative store of value, while CBDCs could become the digital equivalent of cash, used for daily transactions. But they could also compete. If CBDCs are able to offer a level of privacy akin to cash, and if they become universally accepted, they could potentially challenge Bitcoin's position. There are also challenges on the horizon that could shape this future. Technological advancements, regulatory changes, economic shifts, and societal acceptance will all play a crucial role. The issues of scalability and energy consumption, for instance, are hurdles that Bitcoin needs to overcome. CBDCs, on the other hand, will have to navigate the complexities of international coordination and interoperability. This is a world where the only constant is change. The narrative of digital currencies is still being written, and the next few chapters are sure to be filled with surprises. But one thing is clear: the digital currency revolution is here to stay. It's a brave new world, one where the lines between the physical and the digital, the tangible and the intangible, are increasingly blurred. The world of digital currencies is evolving at a rapid pace. Whether Bitcoin or CBDCs, one thing is certain: the future of money is digital.